Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today is Michael Becker.
Hey, Paul.
Hey, Michael. Thanks for coming into the podcast with us. Today we have a treat. You know, people sometimes ask me, Paul, how do you get into the multifamily ownership piece? And I say, well, sometimes you can go right out of the box and buy a 100 or 200 unit property. But probably the best idea is baby steps. And so today in the podcast, we're going to talk a little bit about baby steps. And we're going to talk a little bit about the bigger picture of buying a smaller property and then probably gradually going up to a larger property, kind of doing it the old-fashioned way, baby steps. So today in the podcast, we have the team from Marcus & Millichap here in the Dallas-Fort Worth area. The person who leads the team is a gentleman named Nick Fluellen. And we have two of his guys that work in the 75 units and below. 75 units below. We have Evan Burke and Scott Ogilvie. So, guys, thanks for coming to the podcast. We appreciate it. How are you guys doing today?
It's great. We're doing well. Thanks for having us. It's great to be here, and look forward to kind of diving into to some 75 unit and under talk today.
So let's talk a little bit about Marcus & Millichap. Some people are familiar with Marcus & Millichap. Some people are not. Give me kind of a little bit of a background of Marcus & Millichap.
Well, Marcus & Millichap is the largest investment sales force in the country. All we do is investment sales. We don't do any leasing, don't do any management. We have 80-plus offices around the country, and that number kind of continues to grow as the market continues to be very strong. And we have over 1,600 agents around the country as well, specializing in literally every product type you can think of, from multifamily to retail to single tenant, self-storage, seniors housing, manufactured housing, hospitality, golf courses, etc. I mean, we have experts in literally all of those areas. But originally, Marcus & Millichap was known for its multifamily roots, which we began on the West Coast. So, we still have a very strong multi-family presence, and I think it'd be safe to say that's really the bread and butter of the firm.
So Nick is the team leader. So let's talk a little bit about Nick. Tell us a little bit more about Nick Fluellen.
I started at Marcus & Millichap in 2004, so coming up on 12 years here shortly. And like a lot of agents getting started, you generally start with the smaller assets. And at that time, the market was really taking off, and so I had an opportunity to grow pretty rapidly in my business. And so we were doing really a pretty good mix of large deals and small deals, and quite honestly, we were doing everything we could get our hands on at that time. And I would say, as time went by and, my business evolved more into larger deals, we still had a number of people that wanted to do some of the smaller transactions, and we would get calls from new buyers entering the market or people who saw a lot of our stuff that were interested in selling. And so in about February of 2012, I was actually at a Marcus & Millichap event, our National Achievement Awards in Hawaii, and it's funny when you're just sitting there with other guys from around the country. A lot of times you're kicking around ideas with different agents, and I just got to talking with some guys, and they had kind of mentioned that they really decided, hey, we're not going to do these small deals anymore, and so we just literally kind of hand off everything below a certain number. It's different in every market, based on deal size, and I was also reading From Good to Great at that point in time, and literally was sitting there reading this book and having these conversations, and the hedgehog concept in that book, which is, really doing what you do really well, was kind of the concept behind it. And so I guess the wheels started turning in my mind. I thought, instead of us just kind of doing a little of this and a little of that, let's really differentiate ourselves and create a team and a brand that can specifically focus on these smaller assets, because they're very different. As Scott and Evan will share with you guys some of the nuances, but so that was really kind of how the idea was born. So we're 4 years into it now, and I mean, we are the only team in this market, and the only team really that I know of in any market that has a setup quite like this. I mean,
yeah, you guys have done just fantastic in the marketplace in the Dallas-Fort Worth and North Texas and all the way down to probably Waco in this marketplace. Nick won't tell you, but I'll tell you, Nick is a top producer for Marcus Millichap on a national footprint basis. I mean, he is the guy when it comes to multifamily in the Dallas-Fort Worth and North Texas area. He's a graduate of Texas A&M University, has a master's degree in real estate. So he is all about the real estate. So I'm going to turn this over a little bit to Mike and tell us a little bit more about brokerage. That's one of the things that I want to kind of figure out about is what's really the difference between being a residential listing agent and a multifamily listing agent, and what does that mean, Nick?
Well, I mean, when people ask us, what do you do? What does it mean to be an apartment broker? I think the simple answer is always, well, everybody knows what a realtor does. And so you say, we're kind of like a realtor for larger transactions, only on a much more, sophisticated level. There's a lot more moving parts as everyone would expect in an apartment transaction. And so our primary business is representing sellers and creating a market for those assets. And because of our platform and because we have 80 plus offices, we're able to work with guys all over the country. And so somebody in our Encino office may have a private, one-off buyer who nobody's ever heard of, nobody's ever come across here in this market, but they can see our deals and bring that buyer to the table. And so we've done a lot of deals that way. One of the core differences is that we don't, sometimes there's a buyer's broker, like in that scenario, or when we work with some of the other agents here in this market, but it's not uncommon for us to really be working with the seller and with the buyer directly. And sometimes we have an intermediary status where we have someone. That's one of the benefits of having a large team is we can have somebody represent the seller, have someone represent the buyer, and that way, everyone's got proper representation. There are definitely times where we only represent the seller, but even in those cases, I mean, the seller's interest is to get the deal closed, and the buyer's interest is to get the deal closed, and the seller's hired us to make that happen. So we want it to be a good, smooth process for everyone. And, we take a lot of pride in our relationships with our sellers and our buyers and making the deal happen and get it to the finish line the first time.
Yeah, got it. So, Scott, let me kind of transition over to you. What's like a typical day for you guys? I mean, you're out there, how many owners you guys out there calling on a daily basis? And what's kind of some of the feedback that you get when you're out there in the marketplace, talking to owners of apartment complexes, especially the smaller ones?
Great question. In our 75 unit and under segment, it's imperative that we stay high velocity. And so with that said, what we aim to do is to put out 50 calls a day to potential sellers. And that's our goal. And so as a week, as Evan and I are able to put out 500 calls to active players in the industry, then we'll be able to identify good deals for our buyers.
So what's some of the feedback, or when you're talking to these owners, are they realistic with their expectations on pricing to what the market's bearing, or is there a little bit of a disconnect? What's kind of your general feedback?
There's no question we're in a crazy market. There's compressed cap rates, and assets are trading at record high prices. Sometimes we find ourselves having to pull sellers back to reality a bit and focus on the fundamentals. It boils down to a bit of a yield threshold, and through our broker opinion of value analysis, our objective is to find alignment with the seller's expectations and where deals are eventually going to be trading in the marketplace. And we need to be able to speak to the upside for potential buyers.
Yeah, got it. So let's maybe talk about a recent deal you did. I know you guys came out and successfully just recently closed a property called Soho in Dallas. Tell us a little bit about that deal. How big was it? How many potential buyers? You kind of talk maybe through the process of listing it.
Sure. Soho had a great deal story. It was a Class B asset, 80s product in Lake Highlands with a little more than $750,000 of recent capital improvements. Soho had plenty of upside opportunity due to under-market rents and the potential to drive those up with extensive interior upgrades. And this submarket currently is experiencing major regentrification. Right across the street from Soho is a major residential development called Bordeaux at Lake Highlands. And these homes are starting at $800,000. And also Soho's in Richardson ISD, which who doesn't want to be in that school district? All these elements drove an inordinate amount of interest. We had over 35 tours with pre-qualified investors and generated 22 letters of intent.
Wow. So once you get 22 letters of intent, what's kind of the process from there? How did you start narrowing it down and ultimately select the winning bidder?
It was a very competitive deal. When identifying the ideal buyer to satisfy our sellers' objectives, we needed to select someone that had the greatest certainty of close. The groups that made it to our best and final round all offered hard money day one. This speaks volumes to us about a buyer's seriousness and commitment to getting the deal done. We also took the opportunity to speak with each potential buyer's mortgage broker and vet them out to their commitment to the transaction.
So was this a deal offered free and clear, or was there an assumption or loan that had to be assumed in place?
This deal was offered free and clear, and there was definitely some aggressive loan options out there. 3 years of interest only, something that really drives that cash-on-cash return for those first 3 years through the roof.
Yeah, definitely. So, Evan, you've recently had some success as well selling to first-timers, new buyers of apartment complexes. Maybe you can kind of talk a little bit about the last couple transactions you've done, so as far as size, number of units, kind of who's a typical buyer of some of those deals.
Yeah, absolutely. So one of the deals that we traded recently was a deal in North McKinney, actually a small town called Howe. It was a 20-unit deal, 1979 construction. It was a first-time buyer partnership, and frankly, it was great to work with him. He was well educated. He had his financing in place, and he knew what he was looking for. So the seller was ready to sell, and we were talking about the 75-unit and under market. The seller was ready to sell because he had owned it for a while and was ready to improve his economies of scale, and it traded hands with the first-time buyer. Similar deal in Denton. We did a 16-unit deal, 1970 construction. Again, it was a first-time buyer partnership, and the seller was a first-time owner. So we see that quite a bit at this level, trading hands of first-time investors. And not only do we want to handle those transactions at the smaller end, but like we were talking about earlier, as advisors and playing the long game, we want to walk with those investors for a long time and have the partnership as they go from, a 20-unit deal to a 60-unit deal to a 100-unit deal to, the sky's the limit.
So maybe talk a little bit about what's kind of some unique challenges or some common themes that come up when you're dealing with first-time buyers or first-time sellers. What are some of the things that really maybe are different, Nick, from a deal that's 200 units to a 30 or 40-unit deal?
They are very, very different transactions. I mean, there's really no other way to say it. I mean, that's why we created, again, this sort of concept. I mean, Evan and Scott are literally walking through this process with folks who are doing it for the first time. I mean, they don't a lot of times know anything other than I should be investing in real estate, right, because it seems like everybody I know that's investing in real estate is making better money than people that are investing elsewhere. So I mean, that goes into how do I get my debt? How do I do due diligence? What attorney should I use? What management company should I use? What do I need to even talk about that's going to interest the seller? What, do I need a proof of funds? Do I need my bio? I mean, all that kind of stuff. I mean, versus when you're selling somebody a 200-unit deal, we've certainly sold people that are first-time buyers 200-unit deals, but that's pretty rare. I mean, most of the time they've done a number of transactions or had some sort of experience elsewhere, and so there's a little less hand-holding, if you will. But we're happy to do that, and quite honestly, Marcus and Millichap is the category killer in transactions under $10 million in the nation. We've made a very good business out of helping somebody buy their first deal, sell that deal, exchange up into something larger, et cetera, et cetera, et cetera. And, we've got clients. I have clients that I've done deals with that, were 12 units when I was starting, and now they own multiple deals that are a couple hundred units each, So our goal is to walk with them, grow with them, through that process. We'll teach them as much as we can teach them or help them find the resources to get the deal from A to Z, and we'll be patient with them. I mean, that's really a big part of it. And because we have this 75-unit and under specialty, you don't have a broker who this is just sort of a small deal to them. Like, these are the type of deals, these 16-unit, these 24-unit, these 50-unit. Maybe some other brokers may say, yeah, I'll work on that deal, but it's not a priority for me. Those are right in our wheelhouse in our 75-unit and under team, and so those are really important deals. And by the way, those deals are treated exactly the same from the time they come into the door to the time they close is a $20 million deal. And that's a big part of our value is our first-time buyer, first-time seller, is treated the exact same as what we would treat an institutional client. And that's a big part of what we bring to the table.
Evan, so maybe going back to you real quick on your two deals, you mentioned your deal, your 20-unit deal and your 16-unit deal.
Yeah.
How did those buyers come to the table with their capital? Were these just like one-off type guys that had their own funds, or they go out and syndicate it? So maybe talk through that and some of your experiences in general on the transaction close, and how, are these just sophisticated people that are raising money, or are they just kind of guys with their own capital?
Yeah, both cases happen to be partnerships. Most of the funding was from the general partner or the lead investor, if you will, with some other involvement from, I assume, family and friends. So that's where they came from. One thing that in both cases, actually, these investors invested their time and their education and came ready to go. One thing that I want to communicate to all new buyers is get yourself educated, whether that means talking to an expert, talking to you guys at Old Capital about how financing works. You're already listening to the podcast. You're already investing in gaining an understanding of this industry. And reach out to brokers as well. That's our role. My role to a new buyer is to be an advisor, to give advice and assistance along the way, whether, even if that's passing it off to an attorney or to a property manager or something like that. So, yeah, in both cases, education was paramount, and I would certainly say that's an important facet of being an investor and getting into these deals.
So one of the things that people ask me all the time is, why do people sell these properties every couple of years? And so I'm going to ask you that question. Why do people sell these properties? And I can tell you, this may be the answer, this may not be the answer, but I see these small properties like in dog life, that 1 year of ownership of an apartment building is like 7 years in life. And so by the time you're 3 years of dog life into an apartment building, which is like equals 21 years ownership, you're tired. Of this small property, you either want to exit the business, it's just too much, or you just absolutely love it and you want to bring your business to the next level. Instead of doing a 20-unit building, you want to do a 75 or to an 80 or 90 or 150-unit building. So you start to assemble more capital. So would that be your opinion, Nick and guys, of why people sell these properties every 3 or 4 years?
Yeah, I think especially in the 75-unit and under realm, that's the natural starting point. Get in the business, do a deal, stop sitting on the sideline, and start putting your money to work. And there's a lot of great deals that we sell that kind of fall in that range. Now, that being said, we don't have investors that are saying, I want to only own 75-unit under deals for my entire career.
Right.
I've never had that conversation yet. Most people, as they get in, they say, well, this is really great. This deal worked out really well. Imagine if I were to sell a larger deal at a $10,000 a unit premium or whatever the number is. So I think you get in, you learn, you get your education, and maybe you start with a 16-unit deal, and then you exchange up to a 50-unit deal, and then you exchange up to a 150-unit deal. We see that all the time. So I think that's probably the primary reason. Obviously, there are other motivations, and there's all kinds of issues that you run across. You may have a partnership that is not the best partnership. You may have management issues. Quite honestly, and we can touch on that in a bit. Again, that's part of the value that we bring to the table. But the vendors are hard to find on these smaller deals, and so it's very important you work with people that are experts in this field. And Evan and Scott are working on these deals all day, every day, so they know exactly who's doing well and who's not doing well. And when they're talking to investors that are real happy with their property, they're taking note of that. Who's managing your deal? How are you doing this? Or, so all those kind of things kind of play into it. But I think more than anything else, just scaling up eventually is kind of the end game for everyone. And so it's a great place to start in the small sector, and we'll help them walk into the larger sector too. And so you work with our team, you get to know our team, we help you on the small deals, and then we're going to work with you literally all the way up until you're doing your 300 or 400 unit deals.
Yeah, some of these properties that are fairly small, we're getting on towards tax time, and a lot of the people bring their financial statements to their CPA in a shoebox. A A lot of these smaller properties are mom and pop operations, and sometimes those financials are in the back of napkins and half-completed Excel reports. So I give you guys a lot of credit on how you decipher people's financial statements and make them into something that people can understand. So the real value is taking something that people can't understand in these financial statements and making it the ability to push out great information to a potential buyer of what actually is going on this property. Anything more to add to that, Scott?
Yeah, it can be a hurdle that we have to get through at times, but part of that, something that we've structured is a bit of co-asset management and preparation to really diving into the financials and helping investors create templates so that they can track their revenue and utility history. Those are two main factors that we need to be able to see record of from owners. And then the rest we can identify and build out and really help these owners make sure that they understand their profit and loss statements and are keeping track of it accurately so that we can give a proper picture and depiction of this to the marketplace, something that's tangible and real and that we can speak to.
Maybe Evan, Nick, one of you guys can tell us a little bit maybe about the difference between how primary market like Dallas-Fort Worth and a secondary or tertiary market work. What are some of the challenges, first-timers or new people to the market need to understand? Are some of the differences between how those the two markets kind of operate differently?
Yeah, so we've worked in both. It's important to know that market. Being that we're local in the Dallas-Fort Worth area, it's pretty easy to be in touch with what the market's doing, and many others are as well. The thing that is important with those secondary, tertiary markets is reaching out to an expert who's going to spend their time investigating and getting to know that market so that wise decisions can be made. And that goes back to the purpose that we serve as being advisors. Part of that role is doing our homework and knowing those secondary, tertiary markets. So a value of a property in Dallas is not going to, and one that looks very similar in a tertiary market is not going to be valued the same. So we have to account for that. We have to factor that. And frankly, there's a lot of data and analysis that goes into such things for us to create those kind of values. So it's important to really reach out to experts to do that kind of legwork so that you're not going in blind.
Yeah. Maybe you guys could give a couple top ideas or top themes when you're a first-timer or new into the business and you're trying to get started. What are maybe the top 2-3 things that people need to know about the apartment business?
Yeah, I think it's hard to get your first deal. I think that's the bottom line. If you have other people that are experienced, as a seller, you'd probably look at that and say, well, yeah, my odds of closing this deal are greater. We closed 36 deals last year. 34 of the 36 closed with the first buyer in escrow. So as brokers, it's something we spend a lot of time vetting on the front end of the deal to make sure, nobody needs the practice of opening escrow and having somebody bail out. So
how do you overcome that? I'm a first timer. How do I increase my chances?
So I think Evan alluded to, just being prepared, coming in, having some sort of knowledge on the front end. Don't wait to talk to a management company or a mortgage broker. When you have a deal, send them your financials. Let you guys vet them on the front end. I can't tell you how many transactions we do, obviously with you guys, that, you say, hey, look, we know this person. We've talked to them. They're qualified. They're legit. That adds so much credibility to these buyers as we're presenting them to the seller if we have y'all's stamp of approval on it. Having a proof of funds. If you are an individual buying a deal, if you're putting together a partnership, be very clear on how that money and equity is going to be funded. People like to know who they're dealing with. So a little bio. Here's who I am. Here's what I do. Here's why I'm doing this. If you've done a lot of homework on the property up front, here's what I know about the deal. I've met with the city. I've driven the property during the day. I've driven it at night. I've studied this. Yeah. I talked to a contractor and, based on what meets the eye, I feel like I'm going to do X, Y, and Z to the property. And I built that into my pricing. That's a lot. And quite honestly, again, a lot of these first time buyers don't always do this, but if somebody did have all this done, heck, we wouldn't really even look at them as a first time buyer. They're clearly prepared and they're going to win a deal if they want to win a deal.
Yeah. This market right now is extremely tight. There's limited inventory, and just like what Scott was alluding to, he's making 500 calls a week. This is more than you would just as a sole individual trying to get into the business. This is what Scott, Evan, and Nick do. They have these deep relationships with these ownership groups. But the ownership groups, when they do make a decision that they want to sell, they typically want to sell. They don't want to go through the practice, so they want to make sure that that client, potential buyer, is fully vetted and then believes in the deal, has either their financing put together, their pro forma done by a management company. A lot of these smaller deals, I mean, you still need a management company to manage it. There was a podcast that Nick and I talked about maybe about a year or two ago, and I think you said that management was probably the most critical line item on an expense report about what makes a successful multifamily property. Could you expand on that a little bit, Nick?
Yeah, well, and it's funny coming into this today. I wrote down sort of three takeaways, or if where we're at as of right now in the marketplace, three things that I thought people should sort of know and be aware of. And one of those is if you're buying a deal, management is critical, and that's exactly what I wrote down. It doesn't matter the size of the deal. It doesn't matter the market you're in. That is a universal truth that everybody should really take note of. Management is absolutely critical, and there's a lot of good management companies out there, and there's a lot of different size management companies. There's a lot of different styles of management company. I would just tell you, do your homework on that and make sure that the management company meshes with you. Some owners are more hands-on, some are less hands-on. Some management companies like owners to be hands-on, some don't want them to be as hands-on. The people you're going to be working with, make sure that it's a fit for your style and the property. There's a lot of great management companies, but they're not necessarily a great management company for a particular deal. So you want to really match your management company with your deal, and you want your deal to be important to that management company. Just like I said, some of these small deals maybe are an afterthought to some brokers who are working on larger deals. They're not for us because we have a team set up to do that. It's the same on the management side. If a management company manages 15,000 units, they're not going to be that excited about a 35-unit deal. That isn't moving the needle. So that's big. A second thing, which really speaks, and this is really more in y'all's wheelhouse, but it's critical as brokers when we go to sell a deal on the back end, is match your debt to your exit strategy or your holding strategy.
What does that mean? Because I think that's critical.
Well, I would say 3 years ago, 5 years ago, if you could put a 10-year Fannie loan on a deal, that's just what you did. You put a 10-year Fannie loan on it. Oh, great, Fannie likes my deal. I'm gonna put a long-term loan on it. And I think what we have found is that the financing is so competitive right now and so attractive, and a lot of these buyers are very yield driven. So to the extent you can get interest-only financing, that that makes a big difference in the pricing. To the extent that if you get 2 years of IO and then you sell in 4 years, the new buyer doesn't have the benefit of that IO at all, and you have issues with the loan-to-value ratio and getting the loan that you want. And again, talking about our stats last year, we sold 36 deals, 35 of them had new debt. And the only one that didn't had 9 years left on the loan, and it was in the low fours. And even still, that deal would have been worth more had it had the ability to have new debt on it. So I would just say, make sure if you plan on selling in 2 or 3 years, then make sure your loan will give you flexibility to do that, because quite honestly, most buyers would prefer not to assume a loan in the market right now. And so, it's just something to think about. And there are times when a 10-year Fannie loan or a 12-year Fannie loan works well, but just make sure that you do your homework and know what the possibilities are if you were to sell at different points in time. So that's the second point. And I think the third thing is there's a lot of the most common question we get asked as brokers is, where are we at in the cycle? What inning are we in? All that kind of stuff. I'm a very optimistic person by nature, but I've been through cycles, and I've seen, I saw the last cycle, and I started when the market was really rising, and then I saw the downturn and seen it rise again. It's different this time. That's what I would say. I'm not suggesting we're not going to have a change at some point or an adjustment or a quote-unquote downturn, but it's pretty hard to look at DFW right now and see what's going to happen in DFW that's going to make things change dramatically. This is not California. We don't see values one day that are $1 million, the next day they're 600,000. That's not what we really see here. In fact, our CEO, our new CEO, effective tomorrow, I guess, was on Bloomberg yesterday, and He referenced DFW as one of the best, if not the best, market in the country, and it was the number one market in the country for new jobs. I would suggest to you that we have a housing shortage in DFW right now, and I don't see what's going to happen in this market that's going to really change things right now. And I do think when we have a quote-unquote downturn, it's going to be more of a flattening out as opposed to a true big downward adjustment. So, of course, I'm not an economist, but I'm seeing, I'm living this every single day. And, I just don't think DFW is going anywhere. I think if you're a person who wants to invest money, this is a really, really great time to invest money. And I know people are concerned that prices are high, but the debt is so much better than it's ever been before that I can tell you prices were lower in the last cycle than what they are now, obviously, but the debt was far worse than it is now. The yields are much higher than they are today than they were in the last cycle, even though the values are higher. So
the rents are way up, too.
Yeah. So rents are higher. Interest rates are lower. There's more interest-only debt. You have all the ingredients right now to really make very nice yield, have still very good upside with rental rates still increasing, and to buy some really nice deals. So I wouldn't be overly concerned at the values. I think the values are not – I don't see the values going the other direction. I think over time they're going to continue to rise, and we're really in the best market in the country right now.
Speaking of the market, so where are we right now? Like, what are you seeing as far as maybe compared to a year ago? Where's the inventory on the market? Where's pricing kind of gone from 12 months back to now? And then when you're out there seeing more and more deals that are trading, are we seeing more loan assumptions, as you alluded to, where people put Fannie Mae debt on, and the more of those deals come to market with loan assumptions versus free and clear? Kind of maybe talk through that.
Yeah. I've never. We almost see no assumptions right now. It's incredible as we value these deals. We look at the assumption, but we also will look at it free and clear and factor in what the prepayment penalty is. And we literally have a deal in escrow right now where there's $1 million plus prepayment penalty, and the seller's just gonna absorb it. We've got another one with a $700,000 prepayment penalty. Seller's going to absorb it because even with that, they still get a higher price net proceeds than they would with an assumption. So what does that mean? If you would have matched your debt to your exit strategy, you would have had that much more money in your pocket. So that's definitely the case as far as where we're at in the market now versus a year ago. I think a year ago, even 2 years ago, there was some sticker shock on some deals that, oh my gosh, I can't believe this deal sold for that amount of money. I think that's kind of gone away. Now, there's been enough transactions to where, people are sort of accepting, this is the new norm, kind of like, NBA salaries or NFL salaries. They seem outrageous, but, and then, you look 3 years later and you're like, well, that wasn't that bad of a contract necessarily, I really think that's kind of where we're at with these values right now. They're continuing to rise. There's not as much inventory on the market as of right now today.
April 2016. So what were we like last year? What did you guys have out last year versus say this year right now?
We've this year, as of April 1st, we've closed 9 deals this year. So that's actually ahead of our pace from last year. As far as stuff on the market right now, I would say we probably have less on the market as of right this exact moment in time. But we're working on probably more than we were working on at this time last year. So it's just going to be a timing thing. For us, we fully expect we'll end up doing more than what we did last year. Whether that is a big third quarter, big fourth quarter, the inventory is going to be there. There's a lot of people that want to take advantage of this market and sell. And so I don't think we're seeing some big overall, market change or trend. I just think it just happens to be a moment in time where, we've closed a lot and now we're reloading and we've got a lot of folks that are right on the brink.
It feels to me, being in the market pretty active, that everyone has that same story. There's very little stuff on the market right now. Are we getting pushback, Scott, Evan, when you guys are calling sellers about wanting to wait, wanting to increase their operations, or is everyone ready to, generally take advantage of the tight inventory or the lack of inventory right now?
I think at this point in time, people are ready to take advantage of that as long as their financials are in line and we're able to deliver some upside, then people are ready to move forward.
Yeah, a lot of people are worried about what they're going to do next. They realize that it's a great time to sell, or, the market is hot for buyers, but everybody asks, what do I do once I sell? So
is that the biggest objection you're getting right now?
Yes.
Leg, doing 1031 exchange.
Exactly. The 1031 exchange is a huge piece of the conversation. So once again, not to beat a dead horse, but that's what's so important about it being advisors, because when we're working with individuals, we're working with the full picture from the exit of the current property into the upleg of the next. And that's where we bring value. And essentially that's what we do to make money. So that's our service. And really that speaks to the other side of our team, which is above 75 units.
Yeah, I would just add one thing to what Evan just said is that one thing that we've done more so in the last 12 months than at any other point in my career is, as we mentioned, everybody says, well, gosh, yeah, I realize I should sell right now. The value's high, but I'm worried about what I can buy. If the name of the game is cash flow, which is the name of the game for almost everybody we talk to, there is so much equity trapped in every one of these people's deals because they're going to sell it at a number they probably never thought they'd sell for. And so obviously the concern is now I got to buy at numbers I never thought I'd buy for. But I can tell you this, we do a very unique analysis to say, hey, look, here's your equity in your deal after all your closing costs and everything. And here's your cash flow based on that equity, your return on equity. And quite honestly, the return on equity is pretty terrible for most people at this point in time because the market's so good that the value of their asset has gone up so much and there's a lot of equity in those deals.
It's really inefficient. Yeah.
It's very inefficient. And so I can just tell you, of every analysis that we've ever done, 100% of the time, it makes sense to roll that equity into another deal, and you will improve your cash flow right now because the new debt is so good, and you have all this equity that wasn't getting any return. You can buy a deal even at a compressed cap rate or at a higher per pound play, and if it's just cash flow that you're focused on, you are going to improve your cash flow situation. I mean, I'm really trying to think of a single time where it wasn't an improvement, and it's very hard to do. On top of that, if you own a $1 million deal that's going up in value at 3% a year, or you could turn around and sell that for get a $3 million deal that's going up in value at 3% a year. You're also building your balance sheet a lot quicker that way, which is, again, why people don't generally hold on to these deals for, a super long period of time. So we would love to do that analysis for anyone out there listening that got that exact concern. Hey, I own this deal. I'm not sure what I should do with it. And if the analysis shows, hey, you know what, you should keep it, then that's what we'll tell you. We want it to be a win-win. If it's not a deal that makes sense for you, then we certainly would never advise you to do it. But I think people would be pleasantly surprised that they do have options, and that with the debt that you guys can provide them, that they probably didn't necessarily get because the programs weren't as good when they probably bought their deal as they are now. They can take all that equity that's doing nothing for them and turn it into a pretty nice increased cash flow. And I mean, I've literally seen it double or triple. I mean, there's so much equity trapped in some of these deals.
Spoken like a true broker, huh?
Yeah,
There you go.
Yeah, that's right.
Well, he may sound like a broker, but he also owns lots of apartment units, and that really is a differentiable piece with comes with Nick and his team. They do own properties themselves. A lot of brokers do not. This team does. So their numbers are fairly accurate about how they would run properties and how they would represent you in transactions.
Yeah. Is there any kind of wrapping up here? Is there anything that you want to get across that we haven't been able to communicate along the way, or feel like we pretty much got any kind of closing comments on the market, you guys, and any kind of last little tips to first timers or someone looking at smaller deals?
Yeah, just a couple thoughts that I want to make sure to convey for those people who are saying, I'm interested in investing in real estate and multifamily real estate, but I just don't know what to do. Well, first of all, you're doing the right thing right now. You're getting educated. You're listening and you're hearing, but continue that. Join a networking group, or there's several great books out there. One that I read a long time ago that was really good for me was The ABCs of Real Estate Investing. I think that's Ken McElroy. That got my frame of mind around what this investment deal is. Call Old Capital. Better call Saul.
Yeah. Better call Paul, right?
Better call Paul.
That's right. Tagline that we're working on for him. Get your financing in place. At least have that conversation so that you know what to do when the time is right. These deals trade so fast that you want to have all that in place. And then lastly, let's start a conversation with us. If I can help you, if Scott can help you, if we can just help, again, answer your questions and give you a frame of mind for what to do, you're going to be in the best place possible when the time's come to buy that deal.
Yeah, just to echo what Evan said, we're here to serve our clients, and in any way possible, whether it's getting someone introduced to vendors, creating those relationships, or opening the door to begin the conversation. That's something we do day in and day out to drive value. And at the end of the day, if we're able to serve you guys best, then we've done our job.
Yeah, I would just add, there's always some anxiety when it's time to pull the trigger on a deal, Oh my gosh, I want a deal. Well, now what? I would just say there's a lot of people out there, and in fact, Mike and I, we've had this conversation before. How many deals did you not move forward with because, it's a little too expensive, and in hindsight, I should have done that deal. Look what happened. I would say that's a theme in the marketplace, and it's been a theme over the last few years of the marketplace, is that there's people that are really close to getting a deal, and it's a competitive deal, and if I just pushed a little bit more, at some point you have to say no, and at some point it gets to be too expensive. But I would just encourage everyone, get that deal under your belt, because odds are that little delta that is keeping you from getting a deal, it may not be that big of a deal in the grand scheme of things, and you have to assess that. But I would just encourage folks that there's a lot of people that did buy deals, and they're very happy that they've got those deals under their belt, and it just leads to more deals and a resume that you now have that once you do one, you've got a resume going, right?
It's exponentially easier after you get your first one on your belt. It's not a little easier; it's exponential, 10 times easier.
Couldn't agree more, because and a seller views it that way too. As we talk to these sellers, it's a different conversation if you own something versus if you don't, and so. I would just encourage everyone that don't be scared of the market we're in right now. We're in the best fundamental market in the country, and with the best debt that we've ever had available in the country, and so it's a good time.
Times are good. So what's the is there a simple way to get a hold of you guys? You have a website or something you can give out that would have all you guys' contact information on it?
Yeah, our website is multifamilyadvisors.com. Again, that's multifamilyadvisors.com.
And all three your phone numbers and emails are located on that website?
All of our contact information is on that website, and we would, as Evan said, love to answer any questions, to be a resource in any way, and help you guys start building the right team to make you competitive in the current marketplace.
Evan, Scott, Nick, thank you so much for joining us.
Thank you so much.
Thank you, guys.
Thanks, guys.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.